Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Wednesday, November the 15th. The year's 2023. Let's talk trading. Simple versus easy. These videos are for educational purposes only. Your results may differ from mine. We're talking about simple versus easy. Well, let's start with risk management. What is risk management? It's the plan or strategy that you have in place to make sure you don't lose more than a certain amount on any one particular trade. That's simple. But as humans, we can complicate matters. We can put in all kind of fancy formulas in the indicators to show where our stops could be. I mean, we can really make it complex. But the thing is, this is simple, but what makes it easy? Ease comes with practice. No matter when you first learn something, you're bad at it. And you're probably not going to do it right for a while. I mean, you're just simply going to be bad at it. And then as time, marches on, if you practice on a regular recurring basis, you probably start to see improvements. And then all of a sudden, one day, you're actually good at it. Or if you're not necessarily great at it, but you're good at it, you're competent. And that's really the level that we all need to strive for in trading, is just being competent, as opposed to, airballing trades and not using risk management, just, this time I'll trade 3 lots, next time I'll trade 10 lots, and then I'll trade 2 lots, and I'm going to have a 5 pip stop, and I'll have a 10 pip stop, and then I'll have a 20 pip stop. You're just all over the board. No real strategy, no real plan. Or if it is, it's so complex that you couldn't explain it, to an 8-year-old. So when it comes to risk management, let's keep it simple. Keep your position size the same, which means you're going to keep your risk the same, which means your stop loss is always going to be the same distance from your entry. And that way, over time, you should stay in the game as opposed to getting blown out on 1 or 2 trades, because that's really what we don't want to have happen. So if you have your risk at the appropriate level, it might take you 10, 20, 30, 40, 50 trades before you get blown out. And are you that good? Do you have that much skill that you can lose 10, 20, 30, 40, 50 times in a row? I mean, actually hit your stop loss that many times in a row? That's just something that you have to think about. And then on the entries, I mean, which is probably where I would say probably 80% of the traders probably spend 80% of their time on entries. When really the entry, once again, it doesn't really matter why you entered the trade, because once you enter the trade, then it's up to the market and you. There's really not much you can do to make that trade a winner, but you can make sure that trade doesn't lose you more than what your risk management says you can lose. I mean, we can take a look at the pound right now. It's up to 124.28. It's 333 pips off the monthly low and 77 off the monthly high, which I believe that monthly high occurred yesterday. No, yeah, I think the monthly high did occur yesterday. And we can see all these gaps have filled for the week. But, keeping it simple is not necessarily easy, from the sense that you're your own worst enemy. You might get the SOS or shiny object syndrome. Oh, look at this new method. Oh, look at this new indicator. Oh, I should trade this pair instead of that pair. Or maybe I should move over to crypto. Or maybe I should trade, the futures. Or maybe I should trade some indices. Or, I mean, the more variables you have, the more complex it is. Simple, get rid of as many possible variables as you can. I mean, the opening range. Maybe you don't want to trade on Monday, so you come back on Tuesday, you see what the opening range is, you look at the daily candle color, and you take the trade in a direction. You're either going to go long here or short here. I mean, and you can pretty much do that every day. You can use the previous day's candle as a range, and you can take the breakout of the high or the breakout of the low. Once again, very, very, very simple method. I go through these statistics for the pound because that's what Walmart and I trade. But you can do the same method to no matter what you trade, whether it's stocks, commodities, futures, metals, you choose. But you should have some type of method, plan, strategy, how you analyze things beforehand, and then you start trading your method. It's funny how sometimes during the videos, Walmart and I say, well, you know what, it's probably going to hit here or hit there. And I called it yesterday. He was going for 24.75. I said the thing wants 2,500. And sure enough, it hit the 2,500 later in the day. But somebody asked me about predicting. The thing is, that's not what we're trying to do here. We're not trying to predict. And that's something that traders need to understand. So when price gets to this line, we're not, and the candle color is green, what we're pretty much saying is that chances are that price is going to go through that line. It may or may not. We don't know. And it's not a 50-50. I mean, it could hit the line and reverse. It could hit the line and break through. But the odds are not 50-50. There's only two possibilities, but you really can't assign odds to them. So what you do is you say, you know what, more times than not, it breaks the line, and maybe it'll break it for 2 pips, maybe it'll break it for 20, maybe it'll break it for 200. That I don't know. But what I do know is if it does break it by X number of pips, then I can either move my stop loss up to entry +1, or I can just take those pips right now and be happy. And you see, that's part of why things aren't easy. It's because we'll enter a trade, we'll exit the trade, and then depends on what happens next. Sometimes that affects our happiness, which that's the worst thing that can happen. Because there's no point in looking at it that way. It's only going to frustrate you because it's like so many times, oh, I should have stayed in that trade. Well, the fact of the matter is you didn't stay in the trade. You had reasons to exit the trade. You exit the trade when you wanted to, and hopefully the brokers didn't, steal any of your money back, because sometimes they do, and sometimes they actually give you money. But it just seems like we always remember when they steal it. Point being is, if you executed the trade according to plan, that's all you should evaluate it on. Not that it then went another 5 or 10 pips. Because if you do that, that's going to make it more complex, because now you're going to second guess yourself. And the next thing you know, you're going to see a 5-pip winner turn into a 3-pip loser, and you're going to be stuck in that trade hoping that it comes back. So, and that's just part of reading the market. If you can see the market's just moving a couple pips at a time, take those pips. But if you can see that maybe it's been stuck in a range for, I don't know, 30 minutes, 60 minutes, 90 minutes, and price has to break out of that range. More likely than not, especially during the London and New York sessions, that's when you decide to maybe ride it out. But once again, that's all part of your plan, or should be part of your plan, part of your exit playbook, as I like to call it. Because once again, entries are so simple. I mean, you can either take a trade at a horizontal line or at two lines crossing over, or price crossing over a slanted line or trend line or whatever you want to call it, or you might want to maybe employ, say, the pivot trading plan, and you're trading towards something as opposed to away from something. And sitting here right now, we can see the pound has 96 pips of range. And you see this big green bar. I mean, the person that wanted me to predict, I pretty much have a feeling price is going to come back down to the opening of the bar, because you can see we had a big green bar here. And what did price do? 5 days later? Might take it a few days, but I kind of have the sneaking suspicion we're going to see that open price of 22.77 sometime in the near future. I could be totally wrong, but that's just my bias at the moment. And once again, on the H1, we can see right here, price tried to get to this area, but I still think price is coming back down to here. Once again, I could be wrong. And just remember, these videos are for educational purposes, so your results may differ from mine. And the thing about keeping it simple is, if you know something happens every day, then you can take advantage of it. So like for rats, we know price puts in highs and lows, and price retraces off of those highs and lows. It's called the wicks. I mean, you look at a daily chart, and in most cases, there's a wick, and today's wick is so tiny. I mean, we had a open of 98, we had a high of 99, we got a 1 pip wick, and then price retraced off of it. And in the low, well, you can see here, we came off that low by 27 pips. So we know these things. They're going to happen day after day after day. Price is going to move away from the open. Which way? Oh, I don't know. It's either going to go up, down, or both, but it will move away from the open. It's not just going to sit there. And so that's simple. And so all we have to do is trade the direction of the movement, and maybe we get 5 or 10 pips. Maybe we get, 60 some pips. And I mentioned about the pivot trading plan. It says price near pivot, bias is long. It crashed through the pivot, crossed above it, call it 24.20. It's up 13 pips from that level. Once again, a simple trading plan. Now, in this case, I've got H4 up here. You wouldn't be trading with the candle color, but let's see what happens if I switch over to M30. Well, you can see here, price crossed below the pivot, then it went above it. So, trading the pivot candle color at the line when price is moving in a direction, profitable. So, fellow traders, once again, keep it simple. Take a hard look at what you're doing. Get rid of things that you don't need and make it as simple as possible. Because remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.